Well, it really could be called as a moment in history because after a gap of nearly 3 decades, Bajaj Group company is going public. Why are they going public? Which company is going public? What is the thought here? And what we should expect really from not the new kid on the block, but a new business which has already become the second largest in India. I'm talking about Bajaj Home Finance. So it gives me great pleasure now to bring on board Mr. Sanjeev Bajaj and Mr. Jain to really talk about the IPO. Thank you very much. Why are you going public? This is a small issue. You need capital to grow the home finance business, but Bajaj Finance itself could have capitalized that. So when you go public, it's more scrutiny. It's good news for shareholders, but it's more scrutiny for you. So why have you taken a decision to go public?
Well, as has been announced, Nikunj, we are taking public Bajaj Housing Finance, which currently is a 100% subsidiary of Bajaj Finance. It's a 7-year-old company, and in these 7 years, the capital, the equity capital has been provided by Bajaj Finance, which is also growing, as we know. Now, in these 7 years, led by Atul, the team has actually built a high quality but also a large book. As of first quarter, we are at 97,000 crore AUM. That makes us the largest non-deposit taking housing finance company in the country, growing strongly. And when you look at our own future capital requirements, this is a way for us to go and raise now money from the market rather than looking back at the parent itself. There is also a second reason, which is given our size and being in the upper layer as per RBI classification, there is a requirement to list before September 2025. So combination of those two factors is what has brought us to this IPO.
Bajaj Home Finance is growing at a rate of about 25%. That is almost double that, 25% plus. That makes it almost double than that of the industry average. On this large base, can you maintain this kind of growth?
So Nikunj, the way we look at businesses, we don't get guided by a particular number. Of course, the numbers what you mentioned for the past are there in the public domain. We have grown in last 3 years CAGR of a 31% or last 5 years at a CAGR of a 29%. We believe there is a sufficient or a very large market opportunity available in the mortgage space. The market is very large. Even to the size and the scale what we have reached, we remain a very small portion of the overall mortgage market, because mortgage market is the largest asset class in the country as far as retail space is concerned. Given our relative size, we'll take the opportunistic view. Whatever opportunity to grow is there in the rightful balanced of a risk and return metric in the segments which we feel appropriate, we'll continue to grow, but not guided by a number. Market is large. And the market itself also continues to grow at 12-13%. For that size of a market to grow at that number also shows the robustness of the market. Various government initiatives or government initiatives are directed towards growing this market, specifically through housing for all, because it comes as a corollary of housing for all comes to the home loan market, which is a market which we operate in. Market keeps on growing, we keep on growing, not guided by a particular number,
Mr. Bajaj, if one really looks at the loan book of Bajaj Finance or Home Finance in this case, it is not present in Pradhan Mantri Housing Yojana. The presence in small towns is not there. Focus on large ticket, semi-urban. Will that be the differentiating factor also going forward to maintain this growth?
So, this is Bajaj Housing Finance and distinct from Bajaj Finance, but where Bajaj Housing Finance leverages from the experience of Bajaj Finance in the past is how do you thoughtfully over a period of time enter all the relevant portions of the market. So the most obvious portions to enter were the prime space with salaried customers, big towns, because the volume was there, so economies of scale were there. From there we went into LAP. We went into developer financing so that you participate in the entire value chain in the mortgage space. We've now last year created a separate team to get into affordable housing finance as well. So we will participate in each of these spaces. And when we participate, we are also very conscious of the fact that this to the individual customer is probably his or her largest value loan. So they're very sensitive to who they're dealing with. They're sensitive not only to pricing, but to the entire experience. And their needs also differ. So if you look at large markets, whether it's Delhi, NCR, it's Mumbai, we built capabilities at a micro market level. So what you will see over a period of time is not just a one color suits all way of building this business, but with a lot more micro-related action. So to your question, you will see us in each of these lines of business, but we will build it up gradually as we understand those customer segments, we understand those micro geographies, we build the necessary teams, we build the tech capabilities that have differentiated us for so long, and then we get into that market.
As per the listing requirement, the shareholding needs to come down by additional 15% more and needs to go to 75% in the next 3 years. So are we looking at perhaps more supply coming for the issue of Bajaj Housing Finance?
Even what you see in our capital raise at this time, it's a combination of primary and offer for sale. And this balance is driven by, one, the housing finance company, the amount of capital it needs for the next few years, but also the fact that too much of capital can end up depressing ratios. So we've tried to balance that out, and the rest of it goes to Bajaj Finance, who have been the only shareholder so far, so they get to monetize some of their holding as well. And we will follow that same balance going forward. So it will be first driven by the capital that housing finance gets, and the rest of it will then be OFS that Bajaj Finance will do to meet the regulatory requirements.
Mr. Bajaj, when I speak to our peers, they said that we want to become like Bajaj Finance. At the press conference, you've said that you want to become like HDFC. Why is that?
Well, the question that I was asked is, what do you want to be when
But
you grow
everybody
up?
wants to be like you. Why do you want to be like others?
Because
You
you
are the
have to-
role model for everybody.
Because you have to try to get even better. And that's why my answer was that with a very high respect for what HDFC did in the past multiple decades, is what would be the future HDFC? So not the HDFC of the past, but how should a housing finance company evolve in the coming years? That is what we aspire to be, and hopefully build excellence around that.
HDFC Limited ultimately got merged with HDFC Bank. So are you saying that that is how you started thinking 5 years, 10 years?
Well, we are focused right now on excellence to our customers and to our stakeholders.
Mr. Bajaj, the HFC space is a brutally competitive market. You've got public sector banks, which in a sense are out with rates which are very, very disruptive. Technology, which was an advantage, is perhaps now becoming more like a common link. So my question to you is that why is Bajaj Home Finance growing at a rate which is double that of the industry on this kind of a large base? Are you taking more risk? Do you understand your customers more? What is that secret sauce?
Well, that is the secret sauce, right? And the key word there is secret. And no, if you were taking disproportionately higher risk, it would show up in our numbers. But what you're seeing is, again, industry-leading low GNPAs and net NPAs as well. Technology for technology's sake is meaningless. But using technology to better understand the customer, to be able to access the customer quicker, to be able to complete the loan process faster than somebody else, because rates are by and large the same, as you said. So that's where technology makes a difference. Technology, as it helps us in our processes, in our risk assessment, in our debt management capabilities, in each of these areas, we use technology very effectively. Our variabilization of our entire technology infrastructure running on the cloud, each of these make a very big difference in operating costs, because we are talking of, after all, a business where your spreads are very narrow. So every 5 basis points that you save ends up going to the bottom line.
So I'll take the liberty of perhaps just navigating the conversation to Bajaj Finance. And if I look at a combination of Bajaj Finance and Bajaj Finance subsidiaries, including the Bajaj Finance own subsidiary, we are in 2024. If I take the clock forward to 2030, and if we are engaging on the same forum, what do you think we are likely to be discussing?
Okay, that's a tough question. Looking 6 years into the future.
5 years. I'll make it 3 so that it's easy for you.
Well, in the case of 3 years, very clearly what you will see is a full bouquet set of products and geographies for Bajaj Housing Finance. You will continue to see Bajaj Finance growing additional new lines of business that we've announced in the last 18 months will start becoming a reasonable part of the overall book. But I'll take a stab at 2030 also. You may see very different avatars by then of ourselves. But I leave it at that.
Okay. But one of the avatar, which in a sense is evident the way we look at Bajaj Finservice moving to be a platform company. It's got platforms which are getting incubated. It's got platforms which are small but now become very, very large and relevant. So do you think Bajaj Finance, in a sense, we'll talk about Bajaj Finance in 2030, it would really be a platform company? It would be a traditional company which is going the fintech way?
Why should we look at 2030, Nikunj? Look at Bajaj Finance today. Our app has over 60 million users. We add over 10 million a year. In the last 6 years, we've added 24 million Indians who have entered the formal financial cycle for the first time, which means moving them away from the unscrupulous money lenders into a more institutionalized space. So we can see Bajaj Finance and in addition to that, Bajaj Housing Finance already leveraging the digital platforms that are available. And you know, our presence is omni-channel. It goes from phygital, or we call it phygital, it goes from physical to digital. So there are 130,000 stores around the country where you can enter, you can look at a particular product, you can go to a new housing project, look at a particular apartment, and from then onwards, your entire process becomes digital with us. And leveraging the best of the physical and digital world is what is helping us create this omnipresence platform. And when we say we operate both in the physical and digital world, what it means is that you can move seamlessly across these spaces in your interaction with us. And the app and the web that you use shows that as well. And the better that we get at this, allows us to become more and more of a financial enabling platform.
And looking at your understanding of the economy, and I'm talking about the medium term, are you feeling reasonably confident that the growth rate, what you've reported in the past, is here to stay?
Let's look at the larger economy in the past decade and a half. When I look at the next decade and a half, I believe that we will see, or we have the opportunity to grow even faster. The government has demonstrated over the last decade, not only its intent, but in action. And India of today is a very different place than India of 10 years ago, or even 15 years ago, through multiple governments, I would say. And as long as we continue to see that, and from the intent of the government, there is no difference. I expect that for businesses and for good quality businesses focused on the long term, the sky is really the limit.
You know, I saw this very nice movie a couple of years ago called Wall Street. And the character in Wall Street, Gordon Gekko, he said that every man has a number. What is the number Sanjeev Bajaj is chasing?
Our number is number one. And number one is to mean the most excellent set of businesses. It's not just about scale, though it can't be without scale. But we have very little interest in being number one in size if it's not number one in customer satisfaction.
What about profits? Number one profits?
If it's not number one in profitability, because that depends on your size as well. If we are not number one in coming to customers' mind when they want the next financing product, when they want the next insurance product, when they want to buy the next mutual fund, then we've not done our job. And which then means that for Bajaj Finserv, the challenge and our entire focus is how do we create a certain minimum level of customer experience across our businesses. That's what we are focused to doing, so that we can be number one in your mind when you need a financial product or service.
Well, it's number one on my mind when it comes to getting calls to buy a Bajaj Finance product. How are you looking at solving that problem?
So, you know, there's a lot.
Have you ever got a call saying that, okay, buy a Bajaj Finance product?
Well, the answer is yes. I wouldn't say whether I got approved or not. So there are two parts to it. There's clearly this challenge that we got to know about a few years ago, where in our attempt to provide financing to the masses, a few people felt that they were getting bombarded with these calls. In the last now 2 years, over 97%, if my number is right, of our communication is non-voice call. Second, even last year, we issued over 35 million loans. There are a large number of Indians there who need the loans. They are happy to get contacted by us. And as I said, 97% is non-voice call. It's through messaging, it's through email, it's through digital. We want everybody who wants to interact with us to come through our app or the web.
If you ever want to come on TV, I'll never say no. That's voice and picture both put together in order to, communicate your products.
So it's a combination of what is right for different customers. But we are also very conscious of the fact that there are third parties that are imitating us, that are fraudulent and pretending to be us. And we are taking them down also every week, every day. So it's a combination of these five.
All right.